Hey everybody, Eric Monroe, financial advisor, employee benefit consultant. I have a topic today that is of interest to a lot of people, and it does come across my desk on a regular basis. And this is 1031 exchanges, but not just your straight 1031. That's more of your traditional real estate transaction. This is 1031 into a Delaware Statutory Trust, a DST. So real basic. This video is for anybody who owns investment property that might be looking to exchange it for something else, are tired of managing that property. They're looking for diversification. They want to get out of a multifamily property and diversify into something commercial. If you do it straight with the 1031, it's great. A 1031 allows you to take an appreciated asset in real estate and exchange it for a similar asset in real estate and do that tax free. So all the gains that you have in that property are going to be deferred into the next property. So you can sell one, buy another, and defer your capital gain tax if you do it properly. A lot of moving parts, a lot of timing is involved with this. It's not for the amateur. You want to make sure you're getting good advice. But this came up recently with one of my clients, a retired physician. She actually owned the building that she was in and has a few tenants, but she was in her building with her practice, but she retired, so she's no longer using it. Is looking to sell the property and just has such a low cost basis because a lot of the expenses have brought that down to almost nothing, and it has a quite a good market value. So one of the things we talked about was selling that property, but investing it into a DST, Delaware Statutory Trust, which is similar to a real estate investment trust. But you can make that exchange tax-free, again, doing it properly and into the right one. But she's able to take that one asset and diversify it into other properties. So we're putting some of it into properties that are storage, right? So it's either commercial or residential storage units, warehouses for companies like Amazon, or multifamily properties that are being built new around the country in areas that have high demand. So she's going to take one asset of hers and diversify it into other asset classes still within the real estate industry. And what that is going to allow her to do is defer the capital gain tax, but then also start to receive income off of those properties. So it's also a way to help her supplement and take an asset that has a lot of liability, a lot of expense to manage and run and not diversified, gives her very little income, into the opposite. No management, everything is done for her. She gets a check every month, and she's now diversified that asset from one property into multiple properties. So for her, this is a perfect situation to take advantage of what's out there. So again, I just want to do a high level of this kind of concept with people. There is much more to learn. This is not a video to learn all the nuances and in and outs, but what I can do is set up a call with you if you're interested in learning more. If you are looking at DSTs, there's a lot of them out there, some better than others. Now here's an opportunity for you to run it by someone who's looked at a lot of them and has a chance to give you some feedback, some pros and cons, and help you vet those opportunities, and then you can go ahead and make your final decision with that. So again, 1031 exchanges, properties, tax-free exchange, diversification, and income. That's most of what starters need to know. From there, let's learn a little bit more together. So I hope you like this video. If you do, like it, and kindly share with anybody else that you feel is going to benefit from this information. I appreciate it. Thank you.